Well, hello, everybody. We'll just give it a minute or so for everyone to join us. You have Louis Goldenberg from Xendoo and Lil Roberts from Xendoo. We're so happy you guys are here. We're going to talk about some tax savings today. And as we see people coming in, we'll just give it a minute or so, and we'll go ahead and we'll kick it off and have some fun today, right? Everybody loves to save money on taxes. Right, Louis?
Yes. Overpaying taxes. That's correct.
Exactly. So, all right. See a couple more people just coming into the room, and we'll get started here. So fantastic. All right. See, we got a good amount of people coming in. Welcome. I'm Lil Roberts, CEO and founder of Xendoo, and we're here today with Louis, our director of tax, who's a brilliant forensic tax expert, as well as loves to save small business owners money on their taxes. Right, Louis?
That's right. Nobody wants to overpay in taxes.
Yeah, that's it. Well, thank you everyone for joining us today. We know that it's you're thinking about next tax season. Some of you have just finished filing your taxes for this tax season, and we're going to go ahead and get started here. So we're going to talk about 4 things today. So Louis, we're going to pick your brain. All right. We're going to talk about simplifying the process, simplifying tax differences, keeping the terminology easy and clean. And then at the end, we're going to pay everyone for their time today, because we're going to give a bunch of tax savings tips to get started with, right, for next year.
Right.
So let's dive in. Let's talk about simplifying the process. You know, what documents do you really need, right? You don't have to, get the shoebox out and keep all your receipts like it used to be in the old days. Talk to us a little bit about what are the, say I'm a small business owner and I'm filing I'm filing a 1065 for a multi-member, or I'm filing 1120S. And so my tax deadline is what, March 15th, right?
March 15th.
And then if I choose to go on an extension, it's
September 15th.
All right. What do I really need to give you in order? What should I be thinking? What kind of documents do I need?
You need to have your income expenses in organized buckets. So when
P&L.
you need a P&L. Okay, you need the stuff organized so that you can give it to your tax preparer, so you can prepare, so he or she can prepare the forms.
Perfect. And then what else do you need there? I mean, I know that, we have a lot of e-commerce customers, right? And so we need the 1099K.
You need that.
That's big, right?
Don't forget, you always want to make sure that your gross income equals what's reported on the 1099Ks, at least that amount, or else the IRS is going to send you a letter saying you owe them money because you're reporting less income than what the 1099K is showing.
Right.
So they think you made more, but they don't know that maybe there's some merchant fees in there, right? Things like that.
So when we look at a 1099K, so a lot of our customers are e-com, right? And there's a lot of e-com people that are on the line right now. So when you look at that, sometimes what happens is Amazon or Shopify or whoever you're using as your platform will send you a 1099K, and you're like, well, my sales weren't that much. Well, it's because that you may have been deducting like your expenses, your fees that you're paying them.
Right.
So you have to gross the sales back up, right?
Right. So what hits your bank account is net. The net after all the fees are taken out. So what you want to do at year end is you just want to adjust your sales upward to what the 1099K says, and then you offset that by an account called merchant fees. So it's really, there's no net income change. It's just that you're agreeing to the 1099K. Or else the IRS is going to send you a letter saying, again, you owe us more money, when in fact you really don't, because you recorded your sales net of fees instead of gross.
So what about W-2s? So if you're filing your business, you need your W-2 if you're paying yourself. But sometimes we see business owners where they also have a second job, like maybe they're a fire person, right? And so you need that W-2, but do you file that W-2 with your business return? You don't.
No. So the business return is only for that business. So if you paid yourself from the business on a W-2, that W-2 will be attributable to the business. If you paid other people on your business, that W-2 will be attributed to that business. But if you have other W-2s, that just goes on your personal tax return, Form 1040.
Perfect. All right. So with that, let's talk about we have a fair amount of customers that they are a single member LLC. So they file a Schedule C on their 1040,
Correct.
right? So in that situation, you need a lot more information, right? Don't you in that situation, because you're filing one return for the business and the human, the personal human, you need to know their kids' social security numbers. What else do we need there?
Birth dates, social security numbers, any other tax forms that you receive, your real estate taxes, mortgage interest, any charity you gave, any health expenses, health insurance.
So all the things that you would do for a regular personal return, you're going to also need for that. So the main thing that I'm hearing from you, and correct me if I don't have all the information here, the main thing I'm hearing from you is that the world is digital. And so as a business owner, you need your profit and loss and your balance sheet. So it's important to do monthly profit and loss and balance sheet. We'll talk about other reasons why it's important for that. But for your taxes, you need those two things. You need your W-2 if you paid yourself. You really need your W-3, which is the payroll company saying all payroll that was paid to the company, because that's important. And then if you're e-com, you need your 1099K. And if you're a business that maybe has been paid as a 1099 from other customers, you need that as well, right?
Sure.
Okay. And that's it. You don't need the down to the receipt level of everything. If you've been doing your monthly bookkeeping all along, that's all you need, right? And now taxes have been simplified. Easy peasy. Send it off. All right. And then, you know, obviously, when you talk about the types of differences, so we were talking about 1040 Schedule C, and we're talking about 1065. Let's walk everyone through and let's talk to them about the tax differences.
Can I just go back 1 second?
Yeah.
If you received a 1099 that you received it for your personal name and social security number, but you also have a business, and that 1099 income is really in the business, that income you put in the business bank account, you don't have to pay taxes in both places, on your personal return and on the business return.
Oh, good question.
You have your accountant or you what we call transfer that money from your personal tax return to the business. You write, you know, on a Schedule C, you report the income, then you put as an other expense, transfer income to EIN, and that of the whole amount. So
otherwise, they'd be
income
getting
and
double,
expense.
right? But well, they don't want to do the taxes. They're going to have us do
Oh,
the
right.
taxes, right? But the deal is
You don't pay
that
taxes twice.
don't
That's what
pay
I'm
twice,
saying.
right? So with
Transfer it
that,
out.
right? So again, just to point that out, if you have a 1099 that somebody put in your name and you deposited it into your business, you want to be aware. You don't want to collect. You don't want that to be done twice, because any income in your business that then hits your profit margin, you're going to pay tax on, depending on if you're a pass-through or not. So let's go into all the different types of forms for business owners with their taxes. So first one is sole proprietor, right? So the Form 1040, if you're a sole prop, that means that you're probably running your business out of your personal bank account.
Right. You're not incorporated. There's no LLC.
You're putting everything in, you're commingling.
That's right.
Which you really, once you get past what level do you want to stop commingling?
$10,000. I'd say $5,000.
Really? So once you pass 5,000-10,000 in sales, you want to set up a business?
Yeah.
Okay.
Of course.
Okay, because you're going to maximize your savings.
Right.
And it could still be a Schedule C, so you don't have to file 2 tax returns. All right. So a sole prop is going to be a 1040. An LLC, where
But even a sole prop, any side business or any business that's on a Schedule C making more than, let's say, $20,000 really should be an LLC with the S election, because then you save money in taxes.
we're going to get into that
Save
when
a
we
lot
get
of
to
money.
the
Yeah, just
1120.
want to make sure that we hit that.
Okay. I know.
Schedule C is good for a sole prop. But once you're making more than $10,000, $20,000,
Well, we're going to break it down into
save-
easy numbers.
you can save money.
Okay, so sole proprietor 1040. Walk away nugget here is if you have more than, say, $10,000 in business that you're commingling in your bank account, at $10,000, you're moving past a hobby and you really want to make this a business. And so you should, you know, just file an LLC. It costs about $150, $180 to file an LLC in the state you're in. And then it'll still fall on your Schedule C, but you'll have liability protection instead of it potentially attaching your personal belongings like your house and any other money you may have personally. Second level is you get to an LLC. So an LLC is a single member LLC. Also, if it's a married couple in a lot of states, it's considered a single member LLC.
Could be, right.
Could be. And then if you're a multi-member, then you're automatically, you have to file a separate tax return, business return, which is 1065.
By default,
By
multi-member
default.
LLC is 1065.
Perfect. Let's split these two up, okay? Because here's some tax savings. On the Schedule C, what happens is that every dollar that they pay themselves. So let's give an example. You're a LLC that does $500,000 a year in sales, gross revenue, and it's earning $100,000 in profit.
That's the net income line 31.
Well, none of us care about line 31, Louis, but thank you. I know that you do, but we don't care about line 31. We just want to know, how do we maximize our tax savings? And I say we, because, I'm not a CPA or an accountant. I'm the same as everyone, right? We're all small business owners that just want to save money on our taxes and grow our businesses. So if you're a Schedule C, and in that situation, you're paying yourself $100,000 in income, you're paying too much in tax.
Way too much, because the whole net income is subject to self-employment taxes. That's 15.3%, the entire net income.
Okay, so let's break that down. Self-employment tax is like payroll. So when you have team members, you pay them, and then they're responsible for 0.0765 of their Social Security and Medicare, and the company matches it. But when it's your own company and you're paying your payroll, it's really, you're paying 15.3%. So what they should do is pay themselves a reasonable salary, right? 40, 50,000, and then take the other money as distribution so they don't overpay on Social Security tax.
The distributions would not be subject to the self-employment taxes. So you would save that, but you can't do that on a Schedule C. That's why you have to be an LLC with the S election.
Correct.
That helps you avoid the overpayment of self-employment taxes.
100%. Okay. So, and then 1065 is a pass-through. So whatever, that's like an 1120. So if it's a multi-member LLC,
yes,
same thing, right?
Yes.
Okay, perfect. And somebody just asked a question, how much are taxes? We charge $850 to do a business tax return. And unless you're in one of our plans, and then of course, most of our plans include us taking care of the taxes for you. So thank you very much for that question. There may be some additional costs if you're an FBAR 5471 or 5472 out there, foreign filings, or a lot of real estate. All right, so S-corp. S-corp is what we just talked about. You want to be, if you're making above $40,000, $50,000 in net income. So let's break down net income. You have your gross revenue, you have your cost of goods sold, you have all your expenses, and what's left over is your net income. But your payroll, if your payroll included is part of that net income, right? Then, and you're above $40,000, $50,000, you really want to be an S-corp. And there's a misconception out there about S-corp that, I've had historically, I've had CPAs say to me, oh, you can't convert because you missed the deadline. Is there a deadline on doing it, right? When you form a corporation?
No, the theoretical deadline, but you can backdate an S election. We've done backdates.
So hold on, theoretical and then backdate. Now, walk us through that.
So the theoretical would be the 15th day of the third month after you register your S-corp.
Okay, for the first time.
For the first time. But, because of COVID and because the IRS is so backlogged, they might not process your S election in time anyway to file your tax return in March. So what we suggest doing is you make what's called a late S election.
Right.
And you file it, you attach it with your tax return.
Well, what if I've had my business 5 years and now all of a sudden I've reached a profit state that I'd be better off to be an S election? Can I change?
Of course.
So there isn't like.
You've been an LLC for 5 years making $10,000 or $15,000, $20,000 on a Schedule C, filing on a Schedule C. And all of a sudden now you're making $40,000, $50,000. You can absolutely elect to have the LLC now treated as an S-corp, and you can backdate it 1 year. So if you file a tax return in March of 22,
okay,
you can elect to have it starting 01/01/21.
Wow, that's big savings.
Huge.
Okay, you can't tell us any customers, but what would you say was your largest single tax savings event for a customer?
About $20,000.
20,000? Fantastic. Wow, that's awesome. All right, let's talk about C Corps, right? Because C Corps are an unusual animal in themselves, right? Typically, people, you hear it's double taxation. Is it
Right.
double taxation?
It is, because you're paying tax on the corporate net income. And then if you take a dividend, that dividend is taxed again on the recipient's personal tax return.
Okay,
So
so
income's taxed twice.
So we see a lot of C Corps because they're foreign entities out of the country doing a US based business. And so they're usually a Delaware C or a Wyoming or a Nevada. And they actually could be an LLC and say that they're to be in a tax type of a C Corp.
That's correct.
Explain that, because that gets so confusing. So your tax, your business entity type is separate from your tax type, correct?
Correct. So for an LLC, that's your entity type. However, the LLC can be any one of the 4 tax types. It could be filed taxes as a sole prop,
Okay.
for Schedule C. If it's a multi-member LLC, it files on a partnership tax return by default, or you can elect to have the LLC taxed as an S-corp and even a C Corp.
Okay, so what I'm hearing, to break it down into layman terms. So what I'm hearing is your entity type is one, and then you should speak, your business entity is one for legal protection, and then you should speak with the tax professional to understand what is the best one. Now, so at Xendoo, we love our customers and we love small business, and we love to take care of small business, not only in the US, but also outside the US. Exactly. Anybody who's in a US based business. So we do consultation calls. So somebody can schedule a half an hour consultation call with you for $200 and talk through what's going to be the best way for them to save money. Okay. So just want to throw that out there in case anybody would like to do that. Just live chat in on our website, and Lynn or Dave will take care of getting you all set up for that. All right. So now we've gone through tax types. We've gone through what we need for the tax filings. I'm a big fan of, I think you should file your return on time. I think that you should file it by March 15th and then file your personal by April 15th and get it behind you. You agree? Like, it's best to get a clear head on your business moving forward.
Small business owners, you don't want to have to worry about, oh, I'm going to be late for my taxes, this and that. So, if you're a tax preparer, you should tell your tax preparer, I need my taxes filed on time. We have many customers who come to me every year and say, Louis, got to be done on time.
Perfect.
That's what we do.
Yep.
We get it done on time for anybody who needs it on time.
And they can still file it. So say they're going to owe a lot of money, right? And so some people, this is a common thing. Some people say, oh, I'm going to owe $50,000. I don't want to, I don't have the money and I don't want to pay it in March. They should still file, because then at least they don't have a penalty, right?
Right. You definitely file your taxes, and you can go onto the IRS website and do an IRS payment plan. IRS will work with you.
Okay.
IRS is not mean.
All right.
They just want you to pay the taxes.
Okay. Perfect.
There's many different types.
But of
payment
course, we
plans.
want to make sure that wipe out as much have as many tax deductions and tax savings as possible, right? All right. So let's talk about some of this terminology that can be a little confusing, right? So pass-through income. So that's not as confusing. Pass-through income is really just depends on your tax return type, right?
Right. If you're a partnership or an S-corp, those entities don't really pay taxes. The income from those entities flow through to you and is reported on a K-1, which then gets reported on your personal tax return.
Perfect.
So all your taxes are paid personally.
Right. So in other words, say, you're partners with 3 different friends, and 2 of the businesses have losses and 1 has a gain. So 2 K1s are going to end up being your losses that are going to flow through. So say you have 2 business entities, you lost $10,000 in each one with 2 friends. So now you have $20,000 in losses. And then say on the 3rd entity, on the other business that I have with another friend, say we have a business, we made 20 grand. So basically they're all going to flow to my personal tax return. They're all going to wipe each other out, right? But if they didn't, and they all were making money, I'm in for a surprise come tax time, because I'm going to have to pay Social Security on that. And I'm going to have to pay my taxes.
No Social Security on a K-1,
Yeah.
more times than not, there's no Social Security or Medicare. Unless if you're a partnership, it's a guaranteed payment, then yes, it is.
Okay. All right. Well, that will leave for you to talk to people on an individual basis because guaranteed payment, that confuses me. So, yeah, right. Not everybody has this. All right. Accrual basis versus cash basis. So this is one of my favorite ones to chat about, right? Because
Sure.
when you talk to small business owners, a lot of them are like, oh, no, I need accrual. But really at the end of the day, there's cash basis, there's accrual basis, and everything in the middle is really modified accrual, right? So modified accrual is that I collect all this money from my customers this month, but I pay my insurance annually, and I only each month want to account for 1/12 of that. That's not full accrual. That's just modified accrual, correct?
Right. Full accrual is when you do every account and you do it according to like GAAP, where you're matching your income, all your income expenses.
Right. So like if we took a deposit, if we were an event
Right.
company and I took a $50,000 deposit on an event that's happening in 6 months, I would have to put that on accrual to if say I took it in September, but the event wasn't to March and I didn't want to show that 50,000 was sales.
Right. The cash came in, but the sale won't happen until
Right,
the event happens.
Right. But that can also still be modified accrual.
Right.
A full accrual is full accrual.
That's GAAP.
And typically you don't want to do full accrual unless you're a business over what number of annual sales.
I mean, there's really no hard number. I mean, the IRS sort of mandates it above, let's say, 25 million or so. They don't want to see anybody on the cash basis there. But at small businesses, I mean, at the end of the day, at the end of like a 5-year period, it's going to be the same income, whether you're cash or accrual.
Perfect.
So, but 99% of small businesses are cash basis. It's just easier, simpler, less costly,
Right.
and it's easier for the small business owner to understand.
Understand their numbers.
You don't have to hire anybody to take care of payables.
Right. Because it becomes
receivables.
tedious and it becomes
Sure.
very expensive in your
costly.
accounting. Okay. Carry forward, carry back. What's carry forward, carry back? Is that the groceries?
So if you have losses in your business from year to year, I mean, hopefully you won't, but you can carry forward those losses and offset them against future gains. Now, again, because of COVID, you have the ability to carry back, but that's going to expire pretty soon. So we're talking about carry forward. Any unused losses in 1 year can be carried forward to offset in the next year. And that's for personal income too. If you had rough times last year because of COVID and you had negative personal NOL, negative personal losses, you can bring those losses forward to offset your
Future earnings.
Future
Love it.
earnings.
And there's something out there that a lot of people don't talk about, and it came because of COVID, right? And it's called the 1045.
1045 carryback.
Right. And so 1045 carryback is, say you had since 2013, say 3 out of those, is 2013? Well, it goes back how many years? 6 years?
It's 5 years.
5 years. So last year was 2020 taxes. So say 2015, you made a bunch of money. Say you made $300,000. And then say you then lost money over the next 3-4 years and your losses equaled 400,000. You could go back to claim some of that money that you paid on the 300,000 gain in 2015. And you have to file an amended return, right? And it could take you 6 months to get it back.
So if you had losses in 2019, 20, or 21, you're allowed to carry those losses back 5 years on Form 1045 to get back prior money that you had paid, prior taxes that you paid. You can either file a Form 1045 or you can amend your prior tax returns,
And do it.
but you won't do both.
Okay. So this is a huge, huge win for everybody listening, because if you had losses in 18, 19, or 20, and you had gains the years prior, you want to go back and get that money that you paid. Okay. Because the government is giving you back that money.
That's more clarified. It's 19, 20, or 21.
19, 20, or
Losses
21?
right. 19,
Okay.
20, 21.
Perfect.
And you can carry those back 5 years. So in 2016, 17, 18, if you paid, positive money on your personal tax return, and then you had losses from your business that flow through to you in 19, 20, or 21, carry those back.
That's right. So it's a separate return. You definitely want to call Louis on that. lots of money. We have seen, I think the highest one you saw was about $160,000 that you did a carry back on.
Got it back. That
And-
person got
and-
it back about $45,000.
Yeah, huge, huge. That's what I call a green day. Right?
Absolutely.
All right, so we're down to the last couple of minutes and we'll take some questions. So section 179 and bonus depreciation.
Right. So we're hearing that the government may start letting those expire, but right now in 2021, that you still get 100% bonus depreciation, section 179. So if you need to buy some fixed assets or machinery or equipment or vehicles, buy them.
All right, so let's talk through this one because this one's pretty big. So a couple of things. Here it is, it's October. So most small business owners, they do their tax planning in March. March is too late. Year has passed by. You have 2 months left, right, of the year that you can capture tax savings. And so when you capture tax savings, sometimes they come in a form of a tax investment in your business that you're using money you would otherwise pay the government or Uncle Sam for. So I like to use the pizza shop owner. So pizza shop owner has, say, $100,000 in profit. And here they find themselves in October. And in October, their pizza oven goes down yet again. They constantly are repairing it. And a new pizza oven is $50,000. So that pizza owner, to go out and buy a $50,000 pizza oven, they may be thinking, oh my gosh, I got to pay taxes on my $100,000.
Right.
And that's roughly $34,000 they're going to have to pay on income tax that's going to pass through to them. But if they go ahead and buy the pizza oven right now, before the end of the year, they would section 179 that, which means that whole 50,000 would come as a write-off against the 100,000 of profit, correct?
Correct.
So they would take 16 grand of the 33 that they were paying the government, and that would have been like money that would have been in one pocket to pay the government is actually being used out of this other pocket to pay for the pizza.
Right. So we're big advocates of that. If you need something like the oven, or if you need equipment, or you need a machinery, or you need a vehicle, only if you need it would it be good to go out and spend the money to get the tax
Savings.
deductions. But don't just spend money for tax savings if you don't need it,
Well,
because then you're not saving.
What if you're thinking, okay, so say you're a pest control company, right? And they know that they're maxed out and they really want to put another truck on the road. They're going to be better off buying that truck before the end of the year
Sure.
instead of the new year,
Of course.
because they should go against their tax savings. So also you could use it to grow your business.
Absolutely.
Okay, awesome. So section 179, great, wonderful thing. Health insurance options, HSAs and stuff like that, not huge savings, but I mean, it is something to consider.
Sure. If you're a small business owner and you have employees and you can offer those health insurance options to your employees, they would be very thankful.
Okay, perfect. Child tax credit.
Right. So there's this, because of COVID, the government started paying prepaying these child tax credits, $250 per month, starting in July. So one thing to caution, though, this is not really free money. You won't get as much tax credits next year on your tax return because you only get that certain amount. And then any amount of money that the government's prepaying you, they're going to take off that amount to give you the credit on your tax return. So, I mean, yeah, it's a great thing to get the money up front, the $250 per month per child, but it's not free.
Okay, that's good to know. Home office.
Home office, and we talk about that a lot. The IRS, to keep it simple, has a simplified option, which is $5 a square foot, up to 300 square feet. And if that's not enough and you want to itemize out all your costs, like in the house, and take the percentage of your office space in the house as compared to the whole house, you can do that too.
Not worth the
Dangerous,
squeeze.
though.
Dangerous
though.
and not worth, the juice isn't worth the squeeze,
Dangerous,
right?
Yeah.
So best bet, just be sure, take your $1,500 deduction, right?
Just
That's
take
worth
it.
$500 in your pocket right there. Okay, business expenses from personal funds. So this is one we see a lot, right, Louis?
Yep.
Like,
Small business
usually-
owners forget that, they put business expenses on their personal credit cards or they pay cash for things. They forget, but that's tax deductible. So you got to give your tax preparer by buckets how much you spent
Right. So in other words,
personally.
if you have your business monthly bookkeeping done, which is what we love to do for small business owners. So if you're doing your monthly bookkeeping, but if you have this other credit card, that personal card that every now and again you're putting some business expenses, if you don't tell us or you don't tell your preparer, they're not going to be able to capture that. And you definitely want to capture that. So if it's dinners, that's, 50% write-off. Rent your home to your business. That's a new one. I haven't seen that one before. What do you have there, Louis?
You're allowed to rent your house to your business at a market rate. So if you go to like the Marriott and find out how much it is to rent a room at the Marriott, that's market rate. You can rent 14 days or less. The business pays you the money. Business gets the business expense for it. You don't have to pick up the income.
No way.
14
When did
days.
that come about?
So it's been around for a while. Little known tax trick there.
I love it. I love it.
There's one other tax trick that that most of our people probably have heard of, but if you have to spend money in January, February, accelerate now, spend it now because you get the tax deduction now. So can you prepay your marketing expenses? Can you prepay for some supplies? Can you prepay for some inventory?
But let's also caution everyone that you're kicking the can down the road. So say you throw $50,000 of expenses before the end of December to lower your profit of your business. Your business has to stay growing. So then that way, you don't get caught next year. You're just hanging on to the cash and using it to grow your business. So why not use your own money to grow your business by saving money on your taxes and maximizing your tax deductions, right? That's the name of the game. Okay, so we have 2020 tax extension deadlines. And
they're all up, they're gone.
Well, except for nonprofits.
Nonprofits.
So answer this question, Louis. Say somebody didn't file their S-corp or partnership September 15th, and they didn't file the rest of it on October 15th, but they haven't filed yet. What do they need to do?
Just get your paperwork to your tax preparer and get your tax returns in, because the longer you wait, the more those penalties pile up. Now, there are a couple of tricks that tax preparers can do to help you get out of those penalties, but you want to make sure you file it as soon as possible and file the related income on your personal tax return. The sooner you get it in, the better you can be.
Perfect. So can you take any tax returns on?
Yeah, we have bandwidth.
Yeah.
Always.
Always?
For small business, of course. That's what we do.
Perfect. Love it. Love it. Love it. Awesome. I love it. All right. So we're going to wrap up with just a couple more things here. So financial peace of mind, super important to small business, right? So monthly bookkeeping. So I like to equate this that, your monthly bookkeeping is really, about understanding your business, understanding the financial health, right? Tax returns are the old saying, drive for show and putt for dough. When it comes to tax return time, that's where you get the huge benefits of saving as much money as possible. But if you want to run your business, if you want to get to the green, right, you need to understand your monthly financials.
Sure.
Because understanding your monthly financials is going to tell you about the financial health of your business. One of the things that just absolutely breaks my heart, and this was a study done by US Bank, is that 93% of small business owners run their books from their bank account. So they're just looking, really what they're doing is they're just saying, oh, do I have money? Yep, I have money. They're not looking at the expense side, right? And so then what happens is that 82% of small business owners that fail, they fail from lack of cash flow, not lack of profitability. So listen to that, right? Lack of cash flow. It means that they didn't have visibility to know that they were just almost to the top of the mountain. And so they turned back and they shut the business down. So the business was actually profitable, but because they were choked on cash flow. And lots of times when you talk to small business owners, that money was sitting in receivables or sitting in inventory. And that's the kind of visibility that you get when you are doing a monthly scorecard, which is monthly financials.
That's right.
So we highly recommend either, you can do it yourself. You're not going to maximize your tax savings, but at least you're going to have an idea of what's going on with your business and how much revenue you need. But very important to get your monthly financials done. And then, of course, when it comes to tax time, it's all about tax savings. And October is when you should really be looking at it to say, what do I need to do October, November, and December to maximize my tax savings? What do I need? What types of things do I need to invest in my business for next year that I could actually use some of my tax dollars to do? Because you have enough of a vision of what's happened throughout the whole year, right? And then catch up. Look, 25% of all small business owners are behind on their books, and a lot of them come to us for us to catch them up, and we love to catch them up. Sure. And whether it's a few months or a few years, reach out. Don't don't feel embarrassed or feel, oh my God, I can't believe it, because, you know, we know small business owners wear so many hats. The days become weeks and the weeks become months. And next thing you know, you blink and a couple of years have gone by and you realize, oh my God, I haven't done taxes. And then it makes it hard to live your life, right? Because you can't buy a house and do the things that you want to do, both for your business and your personal life, without having taxes. So we hear it all the time, and no judgment whatsoever.
No.
We get it. You know, you're building a business and you're keeping America running. And so we honor you. We honor everything that small business owners do for America. And
it's also important for your personal health and peace of mind, because the IRS will always come and shock you and say, well, you had all this income hit your bank, let's say, we don't see a tax return, and you don't want that to happen. So let us help you, and you know, we can do catch up for you. It doesn't matter how many years. We'll help you out.
absolutely. So thank you guys so much. There was a couple questions in the chat that I saw. And one of them, as I said, was about pricing on tax returns. And the other one was about how fast to catch up. So catch up is usually 2 weeks to 4 weeks, depending on how far behind. All right, so another question here is, can I use bonus depreciation and Section 179 in the same year? Can they use both?
Sure. Absolutely.
So talk to the people listening, you know, what would be an example where they would use both?
Well, Section 179 is for certain assets, and you know, and the bonus depreciation is for the other types of assets. Like Section 179, you have to use it. You have to use it all.
Right.
Bonus depreciation, you don't. So
Okay.
There's different strategies.
Awesome. Fantastic. Let me see if we have any other questions in here. Yes. Okay. So we have, all right, I'm struggling with inventory counting in the last 3 years and would like to know if you can help me to resolve the issue. 99% gross income comes from Amazon. I have around $1 million inventory left in 2020, bank account transactions for paying suppliers minus sold products costs from Amazon, which I don't think is that much. If I do correct inventory count in 2021, what can be done with the balance, which could be wrong from 2020? Okay, so that particular question, we're going to reach out to you by email to
We'll schedule a call.
yeah, and then
Let's
let's dive in,
understand.
because we need a little bit more
Yeah, we'll
information
understand, sure.
around that. But
We can help you.
yeah, and inventory can be challenging, and as to how you account for it. There are great apps that help, like Trade Gecko, Deer. Depends on your industry. You're on Amazon, so there's certain ones that work best with them, and we can certainly chat about that and help you out. So we'll reach out to you after this call. Somebody else talked about doing taxes. Okay. Will you be able to do everything, Michelle? If you could just add to that, we can, yes, catch up your bookkeeping. We can file the taxes for you. And then if you don't have us do your bookkeeping and you supply us with all the information, we can absolutely do a tax return for you.
Sure.
Okay, let me see what else we have here. And I think that is it. Again, anybody who would like to talk through more taxes, feel free to set up a free consult if you want to dive into particulars and it requires any kind of research or anything like that, then there may be a fee for that. But otherwise, if it's just about understanding what's your tax situation, how you could potentially save, we'd love to chat with you. So thank you so much for your time today, and we look forward to seeing you again. Thanks so much. Bye-bye.